The latest draft of the infrastructure bill includes raising $30 billion a year from cracking down on crypto tax evasion.
Crypto traders may have something else on their minds, with major coins getting slammed heading into the holiday weekend. And given how Bitcoin is traded when the stock markets are closed...
It was a great situation where I don't have to be exactly right because it's a moving target. I can keep adjusting it because it's just a model. That 1800 call too. It was like everyone, all the perma bills were going bearish, bearish, bearish. It was a funny thing, because this thing was going sideways downish for 2 months, and structurally, if you look at the fundamentals on chain, it was really a long-running accumulation bottom. Yet sometimes, it doesn't happen very often, but sometimes price doesn't reflect what's fundamentally happening. So like it just went grinding down. So everyone was fooled by price action. I remember Peter Brandt he was quite bearish too. And, he master technical trader for decades. And he said in one tweet, this is going to be a real test between on-chain, which is kind of new, and technical analysis, because all the technicals were horrible. I looked at the technicals and they looked, just from the price action, it was like scary. But yeah, it was very much an accumulation. We've had 2 months of flows moving, not only off the exchange, you could see it, but not as strong, more that the coins were moving to long-term investors and they were mopping it up. And we had mega amounts of little guys by the gazillions, a very unprecedented number of small people stacking. And I think they were the ones that were registering as long-term holders because, when people come in and buy and they don't register a sell or coins leaving their wallet, they're immediately considered what Glassnode called illiquid, essentially a buyer, and the history is just of buying. So we saw a lot of the stacking, and I've got some new charts actually that I'll probably publish a little bit later showing just these little guys stacking, and they really tell a story of the bull market. So yeah, structurally we've been in a bull market all along, even though price has been so far down. And I was like, there's one of the few circumstances where the market is not only wrong, but ridiculously wrong. Like the price really, the fundamentals right now are no different from when we were in 50, 60,000. So the price has been, I think, just artificially forced down by bearish traders. When we had that massive plummet on the Elon Musk and the China FUD, a lot of coins that were being sold off by whales ended up on exchanges. So I read that as the speculation kind of players, the speculative coins went up. So traders had a lot of ammo, they had a lot of those coins. They immediately absorbed it because they ended up on exchanges. And it's been 2 months of them selling down and those coins being mopped up. And, last week saw the end of that. So no more coins. Well, the supply is running short on the exchanges. So price squeezed. It's very, very seldom you see this at that. Well, I've never seen one at that scale before in the 12-year on-chain history of Bitcoin. We had one October last year, and that resolved in a squeeze, right? It squeezed from 10,000 to 60. And so the supply shock now is at the same level as where we were when we were range bound in the 50, 60,000. So all we need is really the sentiment of traders who really determine the short-term pricing of Bitcoin to switch bullish to the same level of bullish FOMO that you saw, pre-May, April, first quarter type zone, where they started to price a premium into Bitcoin above, the fundamentals. Normally you see the price above the fundamentals in a bull market, and then it gets even more, frothy towards the end is when it just gets out of hand and it's way above what, the long-term guys are supporting the price at. So once that flips, the price, current supply shock, we deserve to be in the 50, 60,000 range. Once we break 42, that's the long-term sort of line in the sand of the channel we've been playing at. And it's just really just a big gap from there to 50. 42 to 50 is just a gap. So if we break 42, it's not going to be much time to get to 50. I think we'll take a little bit more time to slice through. Like, I wouldn't expect us to slice right through, but anything can happen. I kind of expect that we'd just retest some of that zone in there, because we spent so long playing around in that zone of discovering 50 to 60. And then, wow, if we break all-time high from what is that, 64? What was the all-time high? I can't even remember.
It was around 64, yeah. I mean, I got the chart.
If we break that, then we'll be off to the races again. Yeah, I have this model, right, which is the band in which it floats with, and the upper bound. And all the past cycles, we hit the upper bound before it ended. But of course, it's a moving target. It was a great situation where I don't have to be exactly right, because it's a moving target. I can keep adjusting it, because it's just a model. The upper band today is $162,000, and we just don't know which trajectory. But the current trajectory is around. It's because of this major pullback, and it does run on the historic averages of the price movements. I was just thinking, you got this bet, and if it was at the top of the bull market, I'm like going, yeah, that's contingent on a definition of the top of a bull market. If we just keep wandering upwards, like Dan Howell's super cycle. Dan Howell's super cycle is really, I think, we skip a cycle and we just go to the next. If that actually happens and we go to the next, there's not going to be a next cycle, because the halvening don't mean squat. More participants coming in per week. And actually, when we talk about user growth, it's user net growth. It's counting the new guys that have just appeared on the blockchain, and that's a new person, because it's completely new to it's not it didn't go to an existing cluster, so that's new. And then you look at existing clusters and you go, that dude just emptied all their wallets and it's all zeroed. So that's one user lost out of the network, because they no longer hold Bitcoin, and new users coming in, and you do the net balance of that per day, and that is the net user growth. Hardly ever do you see the user growth go below zero per day. Usually it's, I think we're in the 40, 50,000 new users per day zone.
Wow.
Maybe even higher. And then you got to multiply by 3, because there's a ratio of people signing up to exchanges like Coinbase who never withdraw. They might, maybe they install Strike, and then they put their funds straight in from their ACH account or whatever, and they just hold it in their custodial wallet there, and they don't ever pull it on chain, right? So there's a lot of people that actually have exposure to Bitcoin. They might have it on Cash App, but they don't actually pull it to their on-chain wallet. So we never see that. There's a 3-to-1 ratio. So you multiply that number by 3, roughly, and that's how many users. You can assume that what we're seeing on-chain is a shadow of what the real numbers are doing on exchanges. Yeah, it's millions per month. With roughly 150 million users currently. Doubles every year, rule of thumb, kind of like a Moore's law. So yeah, we've got 150 million people to come on board in the next year at current trajectory. Are you seeing much from El Salvador? Because I'm kind of wondering, because I've never, there's a lot of little guys and they're stacking like they've never been before. And I'm just wondering if this is the imprint of a nation state onboarding. We must be seeing, that might be what I'm seeing on chain with the amount of new users hockey sticking.